Many investors are wondering what will be important in the new year. They ask, for example, whether the bull market is a bubble that, if it bursts, would severely damage the global economy. There are indeed some warning signs. Consider the high valuations of stocks related to artificial intelligence, but unlike the internet bubble a good 25 years ago, AI companies are making good money today. In addition, US companies today are moderately indebted, which argues against a stock market crash this year. Another important issue this year are Trump's attacks on the independence of the US Federal Reserve. Fed Chairman Jerome Powell is retiring in May. Trump is likely to nominate a successor who is loyal to him. The independence of the Fed is likely to be significantly damaged. This argues for higher bond yields and a weaker dollar. 2026 will also be about whether or not the long-awaited recovery of the German economy will materialize. We do not believe that it will fail completely. The German government is spending too much money. However, the government money is not having its full effect because there has not been a broad-based restart in economic policy. Many GDP forecasts for 2026 are associated with downside risks. Otherwise, the question keeps coming as to whether there could be a new sovereign debt crisis in the Eurozone in 2026. In fact, the already high debt levels are continuing to rise rapidly, especially in France. But ultimately, the European Union and the ECB will help the countries muddle through, for example, by shifting debt to the European Union or, if necessary, by having the ECB buy government bonds. As far as Trump is concerned, many investors are wondering whether he will lose the midterm elections. In fact, his party is likely to lose at least the House of Representatives. But that does not bode well for Europeans. Because if Trump becomes a lame duck in domestic politics, he is likely to let off steam in foreign policy. See Greenland. Trump is likely to move the markets also in 2026.